right. Happy Tuesday. Hope you're all doing well. Thanks for joining me Tuesday night. Hope you're having a good start to the week. We are talking interest rates this week. Everything that's going on with the interest rates. The Fed is meeting today, and we're going to know about what's happening with what their determination is with the rates. They'll release that information tomorrow. Inventory is starting to creep up. Prices are starting to fall a little bit. So what does this all mean? Well, we're going to kind of dig into that and kind of dissect it. Got a couple articles and some stats and some information for you guys that we're going to talk about. But I want to bring in a friend of mine that we've had on this channel before and always brings a great perspective because I'm East Coast, he's West Coast. So gets a little bit of that California sunshine, kind of brings in more perspective. So I bring on my good friend, Joe Pareca.
Hello.
How are you there?
Thank you.
How are you, Joe?
Always a pleasure to be here.
You sound like you're on a game show, but
do I get to win money today? Is that part of it?
There's no money.
Oh, dang it.
Nobody gets paid. So we're going to talk about some interest rates here and what's going, some things that are going on in the market. And I'm curious to hear, of course, your input and what's happening in the California market on the other side of the country there, and what changes, if anything, you're seeing, because I know you do a lot with first-time homebuyers and the like. So seeing a little bit different, part of the market than say I would, which will be interesting to hear about. But should we dig right in? Let's
do it. Let's go.
All right. So got this article by Realtor.com. And they released says mortgage rates plunged to 6.2. I love it when I say plunge, like as if they were like 16.2. But I think plunged to 6.2, which actually this was dated the 12th, which was Thursday. They dropped even a little bit more since then. It says in more forgiving and flexible housing market. We'll see. Mortgage rates tumbled from 6.35% to 6.2% for a 30-year fixed rate home loan for the week of ending September 12th, according to Freddie Mac. Quote, mortgage rates have fallen more than 0.5% over the last 6 weeks and are at the lowest level since February 2023. I think that's significant.
Oh, for sure.
This is Sam Catter. Is that how you would say his last name? Catter. Freddie Mac's chief economist said rates continue to soften to incoming economic data that is more sedate. For the past 2 weeks, rates lingering at their lowest point in more than a year before this week's further downturn. Yet, despite the rate decline, the U.S. housing market remains sluggish, but perhaps not for long.
Ooh. Yeah, what does that mean?
That's what I'm thinking. We anticipate the marginal buyer will decide to enter the market in the coming months to take advantage of these favorable conditions. This is according to Realtor.com senior economist Ralph McLaughlin. However, other buyers ready to make a move might want to make a move sooner. Quote, seasonal market dynamics suggest that this year's best time to buy is September 29th to October 5th, according to Realtor.com senior economic research analyst Hannah Jones. Have you heard that before, Joe? That this
is the first time I've ever heard there's a set week or range. It's, and I'm sure you'll verify this too, but just like a lot of things, there's an off season, and in real estate, there's an off season. And I have told my buyer clients for a really long time, if you are really committed and dedicated to buying a house, one of the best times to look is between mid-October and mid-February, because there's a lot of buyers that withdraw, pull back from the market because for good reason, it's holidays, it's Christmas time, it's family time, we have all sorts of stuff going on. But if you're a really committed buyer, that means that you could essentially be going up against much less competition. And the second side of that is if there's a seller that's willing to sell during December, Well, they're probably pretty motivated and they're probably pretty serious about selling their home if they're going to do it.
I couldn't agree more. I
Yep.
couldn't agree more. I think that, oftentimes you hear people say, "Oh, well, the spring's the best time to buy, or the spring's the best time to sell." And, yes, that is a very active time of year, but
Yep.
for different reasons.
Yeah.
And if you want a ton of inventory, if you want a ton of choices, then yeah, then you go to the spring market. But the fact of the matter is you're only buying one house.
That's a great point. Yeah. You're only
You're only
buying one
buying one
house.
house.
And
So,
maybe spring is more convenient, but that doesn't necessarily make it better, if that makes sense.
well, and having it more convenient, and that mean having it less convenient means less buyers. Less buyers means less competition. Less
Yep.
competition means you have a better chance of negotiating with the seller because the seller
Yep.
doesn't have as many bodies coming through the door.
Yep.
It could be a good opportunity. Absolutely.
Exactly. Exactly. And that's
Um,
why I tell my buyers, if you're seriously committed and you find something in November, December, absolutely go for it because there's a good chance you're going to be able to get a better price and better terms.
you know what? So here's the thing. Okay. In all my years of doing this, I have never stopped working 12 months out of the year.
Yep. I'm the
There's
same way.
always
I
there's always somebody needing to move. There's always somebody needing
always.
to sell. It always comes back to the same thing.
Yep.
If your personal finances are ready, if your personal situation is ready, if it's right for you, if it's right for the buyer,
Yep.
it doesn't matter what time of year it is. You can play, you can twist, you can finagle and plan that however you want. It doesn't
Yes.
matter. It's more important that you do it based on your own personal situation. 100%.
100%. 100%. You're exactly correct. When it's the right time for you, that means it's the right time to buy a house. Don't worry about spring, summer, fall, interest rates, the market, stocks. No, if you can afford it and you find something you like, you got the green light.
Well, and the thing of it is too is you can look at it from the aspect of, okay, so you waited, right? So
Mhm.
say you wait, 6 months
Yep.
because it's now, and you're like, I want to wait till the spring market. I want to wait until things are popping. Well, that's great. Now the prices are higher.
Yep.
You've lost 6 months worth of potential equity.
Yep.
If you're renting that 6 months of wasted rental income.
Yeah.
So what are you gaining here? I mean, if you haven't found the right property, if you're looking, you can't find the right property, that's one thing. But if
Yeah.
to put off the move, if there's no other reason, it's like now you're actually losing by
Yep.
not buying.
Yep. The cost of
So
waiting is very real. It's very
I
real.
read I read an article earlier today that it said when is the right time to buy? 20 years ago.
Yes. It's
Not 20
always
years
5
ago,
years
like
ago.
the date, but 20 years ago, like you could have been accumulating equity 20 years ago is
For
kind of
sure.
what the thing, what they were saying. And I'm like, you know
Yep.
what? That's absolutely correct. Like if, don't wait because every day that goes by is a day lost
Oh,
building
and
equity.
I ask my on the fence buyers this all the time when we're having this conversation. We're in a house, Joe, and I can tell what's happening. They want to buy the house, they want to put an offer, but they're nervous for
Right.
whatever reason it may be. And I always ask them, I always pose this question: would you rather buy this house today, or would you rather have bought it a year ago? Oh, I would have rather bought
Yes.
it a year ago. Okay, would
Yep.
you rather bought it a year ago or 3 years ago? Oh, 3 years ago. And so on, you keep going back and back, and they start to realize, oh man, I should buy as soon as I'm able to, comfortably able to. And that's
Yep.
the correct answer.
Amen. 100%. Um, okay, so let's see here. It says, going on with this article, it says, with those the seasonal market dynamics, just this year's best time to buy is September 29th, October 5th. With those dates quickly approaching, here's a snapshot of the latest housing data for what it means to home buyers and home sellers. They go on to just say, where mortgage rates are, new listings are up, medium rate. I'm going to actually dig into this a little bit more in depth because I want to show. I kind of want to, show the viewers the difference in changes over the years, specifically the last 5 years, to kind of
Yeah.
get a good idea of what actually is happening. Mortgage rate countdown. It says after years of soaring mortgage rates, relief could finally arrive soon. Market watchers and economists alike believe the Federal Reserve will finally cut rates at its next policy meeting today and tomorrow. Indeed, Chair Jerome Powell himself has indicated that rate cuts are likely. Cooling employment and inflation both came in near their anticipated levels. solidifying the Fed's path toward a rate cut in next week's meeting. It says, while the Fed doesn't set mortgage rates, we're going to talk about this, the two numbers often move in the same direction, and the anticipated rate cut is expected to give the real estate market a much needed boost. So here's the thing about this. Hey, David Matney, with the super chat. Hey, thank you, Mr. Thank you, David.
What a nice guy.
Good to see you. I appreciate you. David's always got great questions.
David's great. David is like my, he hasn't been on my stream, but he participates so much. I'm like, I need to have him as a guest of honor. So David, we're going to link up because we're going to get you on the live stream at some point.
100%. When it comes to interest rates, right? So a lot of people think that with in terms of the Fed rate, when the Fed rate goes down, automatically the mortgage interest rate will go down, and they're not tied together. And that's what they were talking about is the fact that, even if the Fed announces tomorrow that they're cutting the rate by 25 basis points or whatnot, from a very real perspective on the mortgage market, that does not necessarily mean we're going to see it go from 6.2 to 5.8 or 6.1 to 5.9 or 5.7, because the mortgage rate reacts differently. And I always like to say that, to describe it as like the mortgage rate is almost acts on a rumor mill, because there's not a direct correlation. The rate is a reflection of what the bankers and the lenders think is going to happen. If they are spooked, they'll be cautious. If they're feeling confident, then they'll react accordingly. So, but the other thing that I had heard, and we had talked about this before we jumped on the stream, is that the rate reductions that we've seen over the last month have already, like the rate reductions have already been baked in, like that's already come down. So we might not see any movement in that rate. Like these articles, they say, the Fed lowers the rate, that means the interest rate's going to drop even more. That's not necessarily so. You agree?
Good point. Yeah, that's a good point. And a lot of buyers don't really understand, and it's not necessarily their fault, because the news keeps talking about interest rates, mortgage rates. Oh, it's so tough. It's hard for buyers. And they talk about, the federal rate, interest rates. And they don't do a very good job of denoting the difference. The interest rate that we're talking about with the Feds, that the Fed has the ability to change, is the federal funds rate. That's the overnight bank rate. So that's basically the rate of interest that's charged between banks when they lend each other money, or other financial institutions lend each other money. However, like you were saying, Jen, they do typically tend to sort of mirror each other and play off each other, but there's no formal relationship between those two things. And if you start to ask, well, when the federal funds rate goes down, why does the mortgage interest rate go down? That's a very complicated answer that's probably suited better for a mortgage lender or a financer. But essentially, investors are looking to other options to get a better return on their investment. And when the federal funds rate goes down, they start to look to alternatives, including mortgage-backed securities. And when you have more people looking to mortgage-backed securities, they tend to fight for your money a little bit more, hence the lower interest rate for mortgages. Correct.
So this is since 2000, last 24 years of interest rates. Okay. The blue line is the Federal Reserve rate. The red line is the 30-year fixed rate mortgage. And you can kind of see that it does more or less mimic, but not exactly, right? Because you see these big gaps. You see that huge gap between how much it changes here versus here. It's not an equal distance. Whereas the Fed rate might drop to 5.5, so that the mortgage rate is going to drop to 6.5. Like, no, that's not how it works. That's not how it's designed. So is it possible that the Fed rate, just like it hit in 2002, see the Fed rate dropped way down. And the mortgage rate adjusted, but only slightly. It actually here, interestingly enough, you look at this dropped and it actually went up. Here. So the bankers, they were spooked. Something was happening at that point in time in the economy that caused them to say, "Okay, hold on," in the banking industry, and they put the brakes on, and the rates went up a little bit. So I think it's important to, as people are like kind of watching to see what's happening, they're making their plans, their housing plans, on what to do, whether to sell and buy and try to figure all that out. It's not as easy as just watching this rate, and it may come down. I mean, you can see where this right here, there's more, getting into 2022, 2020 or 23, there's a little bit more of an equal gap, but
Yep.
you see all these big spikes. There's no spikes in the Fed rate. So it's just or vice versa, I should say. The
Yeah.
blue, like, yeah, right. I got it the first time. Um, so it's just something. It's just interesting. I wanted to point out because there's, I think there's a lot of. It took me a while, to be honest, to come to the understanding on how that actually works. You know.
Yep. Yeah. The Fed has a big influence, but the Fed does not determine mortgage interest rates. The financial markets, uh, and different institutions determine what they want to lend at what rate. But again, they're looking at what are their alternatives, right? If they don't go into mortgage-backed securities at that rate, well, then that means they have to utilize the federal funds rate. So again, just like anyone else that's looking for the best investment, that's what mortgage investors are looking for. They're looking for the best return on their investment, which when the federal funds rate goes down, that
Yep.
happens to typically be mortgages.
100%. 100%. So the article says that goes on and says home buyers have long faced affordability headwinds, but quote more affordable, more favorable. Geez, I can't read tonight. More favorable housing conditions may be ahead. It's been one of those days. Says Jones. So it says home prices continue to drop. Falling mortgage rates are not the only boon for buyers this fall. Home prices are finally cooling too. With the mortgage rate side of affordability starting to improve, many buyers hope to see prices do the same. Prices did just that the week of ending September 7th, with median list prices falling 0.3% year over year. And of course, we're looking at a national basis.
Yep.
It says not only has the median list price in the US been less than or equal to what it was in the corresponding week of 2023, price reductions are up as well. Sellers are adjusting prices to encourage activity on their listings, and the number of listings with price cuts growing by 33% compared to the same time last year. What are you seeing in over in California? Because I mean, you guys were struggling in California for a while on the inventory, and things set, sitting for a bit. They were selling like hotcakes, and then they weren't. What are you seeing over there on the West Coast at this point?
Yeah. So in general, we're not seeing a whole lot of price cuts here, but I want to preface this with the area that I'm in is highly diversified and really unique. LA County is a county of 10 million people. Okay.
Woo.
So there's more people in LA County than in like the lower half of Canada, right? So there's a lot of people in our area. And that means that just in LA County alone, there is a wide variety of neighborhoods in size, price, and all that stuff. But long story short, what we're seeing is that properties that are priced reasonably, that are presented well, are still typically selling with multiple offers. I mean, the last 3 listings that have come through my office, which usually my office does about 1 to 3 listings a week, not me personally, but my office of about 12 agents. We have a pretty big market share in our town. And of the last 3 or 4 listings, I think, every single one has sold with multiple offers. And a lot of them have even sold for over the asking price.
Wow.
So yeah, we're still seeing a pretty fierce market in terms of competition, but there are some houses that sit, the ones that are slightly less desirable. Maybe the location's not quite as good, on a busier street, busy corner. It's not like 21, 22, and 23, where it's just like, if it's a house with walls and a roof,
Yep.
it's gone, it's gone. So, and I really think that part of the reason that my area is more active is because I am in the most probably one of the most affordable areas of LA County that still has good schools, good communities. So I get a lot of people coming from Los Angeles, Santa Monica, Pasadena that, you know, out there they're going to have to spend 2 million, and here they can get the same house for half the money for about 1 million, which is
Uh,
obviously a huge difference.
okay, so I'm sitting here going, the bargain basement price is $1 million. Is
The,
anyone else watching this like kind of like scratching their head going, how is that how I can't process that information, I'll be perfectly honest. Like,
it's
you
wild,
know, it's
and that's how it is.
affordable. It's affordable for $1 million. I
Yep.
can't fathom that.
Yeah. I mean,
I can't
you
fathom that.
you,
That's crazy.
you can get a condo. You can find starter condos and smaller homes for certainly less, and depending on what neighborhood you go to, you can find homes, single family homes, small ones for 600,000 to 700,000, but they're probably going to be in, an up and coming neighborhood as opposed to something that's more well established. But average price point in the city that I live and work in mostly is just under $1 million. It's about $980,000, and that's for your average home here, which is about to 1,800, 1,900 square feet. Quarter of an acre lot.
So David wants to know how big your personal market area is in terms of driving time and radius.
Okay, so David, if you've been to LA, you know that drive time and radius,
Do you even drive in LA? Like, I feel like it's like you just like walk everywhere, right? I don't know. I've never been to the West Coast.
So depending on where you are, if you're in the suburbs, it's a get in your car and drive type thing. So,
okay.
Drive time wise and radius wise are two different things because of LA traffic. So I work an area that encompasses everything from, let's see, it's about 7 or 8 cities along the foothills. So we have mountains right behind us. So we have the foothill community. So a bunch of cities that are at kind of like the base of these foothills. And that's my area. So to answer your question, David, my personal market probably is made up of about 8 to 10 cities. And it's probably a mile radius of about 30 to 40 miles. And driving, that could take you as little as 30 minutes. It could take you as long as an hour and 20, just depending on where you're going and what time of day.
He wants to know the ballpark for that $1 million property for tax. What would be the tax bill or something like that?
Yep. So I had a client that in 2022 bought a house that was $992,000, and they roughly pay about $1,000 a month in property tax. So
12 grand.
12 grand a year.
12
Now,
grand a year. Okay.
I will say that
California,
California,
that's comparable to what it is here.
It's not unreal. And I will say that, a lot of people like to dig on California for whatever their reason is. And I get it. It's expensive. It's crowded. You may or may not like some of the political climate, whatever, be that as it may. At the end of the day, California does have, the voters of California enacted, and this was back in the mid 70s, a proposition that said property taxes can increase no more than 2% per year. And that's for the whole state.
Oh, yes. What's that called?
I believe that was Prop 13.
Prop 13. That's what it was. Yep.
And that's been huge because that really keeps property taxes reasonable. On top of that, if you're over the age of 55 in California and you have a tax liability, let's say you pay $5,000 a year in property tax and you move and you buy a $1.4 million home, you can carry that property tax amount over to your new home. So your property taxes actually don't increase. They stay the same. And that's if you're over 55. Yes, very useful.
Huh. Very interesting.
Yeah.
That's good to know. I mean, that's interesting to know. Like, I guess if you're moving around, I guess if strategically you want to get in there, you buy the least expensive house you could possibly find and then buy the big house.
Yeah.
Right?
And that's exactly it. And there's obviously some rules and some stipulations, but the idea is they wanted two things. They wanted to entice people to move, to downsize, because a lot of older people over the age of 55, 60, they want to downsize, but it's going to cost them more money in taxes.
Yeah. I think that's a good point. That's absolutely a good point, because that's the thing that's a hot topic across the country right now is, taxes, insurance, HOAs. It's all relating to the cost of living for everybody, for that matter, but at least they give the folks that are on the verge of fixed income
Exactly.
heading into retirement, and give a little break anyways. You know what I mean?
Yep. Yep. And I'll tell you,
Um,
2% per year is great. Obviously you don't ever want your taxes to go up, but if they do, at least it's a very reasonable amount that you can, manage.
right. 100%. Oh, I wanted to, bear with me here. Thought I had, I have to look at this another slide here because I thought I had home prices. Oh, I lost it. Please
No.
stand by. No big deal. I'm just going to look it up real quick here and just bring it up. Here we go. Let's see if we can do this one instead. So in terms of, since we're talking about the home prices, and I just wanted to bring this up in terms of the median home price. It's not exactly the graph I wanted to show, actually, just in terms of, the median list price dropping. But
Yeah.
when we say it's dropping, it's gradual. We're not
You mean
looking, we're
it's
not
not
seeing any,
plummeting?
it's not plummeting. And actually, yeah, they would, sensationalism sells, right?
Of
And
course.
actually, uh, yeah, the home, yeah, no, sorry, I had another article that I was getting ahead of myself on. But yeah, no, the prices itself are not they're not significantly plummeting.
No,
But
I mean, and
we shall see. We'll
it's
see.
good that they're
0.3%. 0.3% is
no,
that's a third of a percent. That's not significant.
not gonna do it.
Um, Number of home sales are increasing. Okay, so which makes sense, right? Makes sense because of the fact that people are coming out of the woodwork, or not necessarily coming out of the woodwork, but they're getting a little bit. They're taking advantage of the fact that the interest rates have slipped a little, and maybe
Yep.
there's a little bit more to choose from. And it says, adding to the trifecta of good news for home buyers is rising housing stock. Total number of houses for sale spiked by an astounding 33.4% for the week ending September 7th compared to the same time last year. The market also saw an uptick in fresh listings with 9.9% more homes hitting the market for the week ending September 7th compared to last year. Just how long has housing stock been rising? This marks a streak of 44. I was actually really surprised about this. 44 weeks in a row that the number of for sale homes has increased, catapulting the housing supply to its highest level since May 2020. So I
Love it.
wanted
That's
to,
great.
yeah. So I wanted to show this. So this is, according to the Federal Reserve here, I'm just get this a little bit bigger so people can see at home. So this is the national from the Federal Reserve Bank of St. Louis. This is data that tracks where the housing inventory is across the country. And if it doesn't go. It's about a month back, right? So, well,
Mhm.
actually, this is saying August 2024, we're at 909,000 for the entire country, which is still significantly lower than where we should be. If we go back to, say, July 2016, you can see this is where we should be. So if you see a lot of for sale signs on the street, it may feel like there's more inventory, but we still have a pretty significant shortage.
Yep.
So, but the thing is it's rebounding because you can see where the lowest point was,
Oh
at
God.
February 2022,
Yeah.
and it is crawling. There was a little surge. You talk, towards the end of the year, and then this is seasonal.
Yep.
A lot of these dips, these are all seasonal. When December, January, this is all winter seasonal stuff. The inventory always dips at the end of the
Always
year.
does. Always
Always,
does. I mean,
always.
a large portion of the United States, they'd have to battle with snowstorms and inclement weather. And, who wants to traipse around in the middle of February, to go try to buy a home when there's 6 feet of snow on the ground? And who wants to
Or just
sell a home
holidays.
during that
Just
time?
holidays,
Yep.
that
And you have
once
holidays as
people,
well. And yeah, and
yeah.
it's so funny because, the crash bros out there who David knows, I love to dig on the crash bros. They'll tell you inventory is rising, inventory through the roof. This is the beginning of the market crash. And it's so funny because this is exactly what we need. We need more inventory. We need price cuts. And the price cuts
Mhm.
that we're seeing are, 1 to 3% below all-time highs. It's not like people are cutting the price on their homes by 20 and 30%. It's not
Right.
like we've exploded in inventory. I saw another stat very recently from Housing Wire, which is another great data-driven housing
Yep.
website, where they were talking about how we have the lowest amount of properties in foreclosure in the history of the United States right now. It's
Really
the lowest amount,
interesting.
which is quite remarkable. So it's just so funny how as we know, the data, the information can be spun or presented in a way that could make people go, "Oh my gosh, there's a huge huge increase, massive increase in inventory. This is the start of the housing crash." If you just look at the data that is on your screen right now, you can see that
Yep.
we are still so historically low. This is exactly what home buyers need. This is going to help them, not hurt
Well,
them.
yeah, I mean, I think it's definitely like, in terms of the upward progression, right? Because you can see where, we're on an upswing since the beginning of the year. It's been
Yep.
gradual. Are we anywhere near where we need to be? Of course not. We're back, to be honest. We're right where we were at the beginning of COVID, at the beginning of pandemic. May 2020 is
Yep.
where technically we were. That is important to know, okay? Because what a lot of people don't realize is that we were in a heavy seller's market. We were in a depreciated market, inventory depreciated market before the pandemic.
You're exactly right.
So it was, we had, and really the shortage on the inventory started when the market crashed, the great financial crisis of '06 and '07.
You're 100%
That is
correct.
where that's where it started, right? That's
Yep.
when things, builders put the brakes on, and that's because that's what you need. You need, in order to get these numbers significantly improved, you need to create more housing.
Yep.
Period.
Yep.
That's the only way this happens. It's
Yep.
the only way it happens. Unless you have, 60 million retirees, baby boomers, just like, aliens come down and just and
You just
take
take
them.
them.
Which
Which there's some Gen Z and millennials out there that are like, "Yeah, come on, aliens, come take the boomers away."
But that's not gonna happen.
No.
There's 75 million people over the age of 60 in this country, and 80% of them, 80% own a home. That's
Yeah.
60 million homes. And the thing of it is those people are not, they're staying in their homes longer. They're
Right.
not, going into nursing homes. They're living
No.
longer.
Yeah.
They're selling and buying another house, which means that it's an even swap on the market. It doesn't
Right.
help the market at all when they sell
Yeah.
because they're taking another property. And
Exactly.
so in order to offset those numbers of homes that are not being introduced to the market, combined with new buyers coming in at record numbers, because
Yep.
the millennials, the size of the millennial generation coming in that are out of buying age, that are coming in, to the market now,
Yep.
there's physically just not enough places for these people to live.
No,
So
and
the only way to do that is to create the housing.
yeah,
That's
and
it.
you hit the nail on the head. This problem is a problem that's been coming to a head since about 2010. And
Yep.
and 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 it makes a lot of sense. Builders got their clocks cleaned. I mean, a lot of people got their clocks cleaned, not just builders,
Right.
but builders, so many builders went out of business, and now these home builders have been consolidated into, now really there's only about 5 or 6 major home builders left in the United States. Yeah, there's these small time builders, but it's really difficult for them to get a market share when you have huge, DR Horton and KB Home and,
Yes.
all of the Lennar that they just put up tracks left and right. But we had a huge, huge issue with inventory starting from 2010. However, because of the economic recovery, it never was really noticed because people were
Right.
recovering. And then COVID brought it to a head. We had millennials that it was really a perfect storm. We have COVID come into the picture right at the same time that millennials are just went into that prime, that ripe home buying age. Most of them in their
Yep.
mid 30s at that time. And then you compound that with the Fed dropping rates to rock bottom pricing. All of a sudden we had very low interest rates, home prices that had not shot up yet, a huge influx of millennial home buyers, plus about 8 years to 8 to 10 years of not building enough housing. And that's how you end up with a huge rampant run up in home pricing that we saw during the COVID years.
Yep. 100%. 100%. I wanted to show this is the latest for the mortgage interest rates, just so that, just, I feel like I wanted to kind of dig into a larger overview. Let's see if that's a little bit. There you go. To show people that, kind of where rates are right now. So this is going back a year, right? So you can see the progression and how they've been gradually. I mean, the highest being April 25th, and how they really started the dropping in April, which doesn't feel like it, but they did. We had a pretty significant drop there, went back up, and then it's been slowly dropping ever since. But I wanted to show, like, over the course of, if we go back even to 2019, 18, let's go back all the way to 2010. It's very interesting, and in terms of where we're at. Actually, you know what? Let's gonna go. There we go. If we go all the way back to the great financial crisis and where they were at in 06, isn't that interesting?
Yeah. Wow.
We're just at this, and then now the market crashed, not because of the rates. The rates, dropped because the market crashed.
Yep.
Right? To try to get people, to get to try to stop the bleeding.
Yep.
And we had totally different circumstances
Completely
that caused that crash. Entirely different. We had an abundance of inventory.
Yeah,
that was, the builders were building spec homes like crazy.
Yep. And that's the biggest difference. And it was interesting. I was talking to a really, really savvy lender who's in my local market. I do a lot of business with her. She's been a top producing lender for about 30 years. So she's seen a lot. And I was talking to her about sort of the difficulty that is this market, and how it's certainly not like 2008, but it has some difficulties like 2008 had difficulties, both for real estate professionals, for home buyers alike. And It's funny, her take was, 2008 was easier to deal with because we had too much inventory. We can get rid of the inventory. You can find people that want to buy houses, you can reduce the prices, but when you don't have the inventory, it's a much harder and longer problem to solve. So it was interesting, she was kind of saying, I actually think that 2008 was a little bit easier to navigate in terms of real estate in general, as opposed to right now, because the problem is fundamentally different. So it was kind of interesting to hear her take that it was almost easier to deal with 2008, where we had a surplus of inventory, as opposed to what we faced during the COVID years. And now that we still have this inventory issue that we're facing.
Well, it was like, it's just a different problem. You know what I'm saying? It's a different issue now versus then, because of the fact that, and this is what I was saying. I was talking to my friend Jackie there yesterday, and it's like the market doesn't stop.
Nope.
It just changes. It just changes. The opportunities are always there. People don't ever stop buying homes. They don't ever stop selling homes. It just changes. When the market crashed, it went from buyers buying in speculation to short sales and foreclosures.
Yes.
But those short sales and foreclosures gave startup investors an opportunity. It gave first-time home buyers an opportunity. It gave people that couldn't get their foot in the door because the market appreciated so fast that, that they couldn't afford to get their foot in the door. Right. And as the values dropped 30% in some areas,
yes,
they were able to afford to be able to do that. So, and that's one of the reasons why it rebounded so well. I mean, it went from a 30% depreciation back up. I mean, it's amazing how quickly it rebounded based on how far it fell. I know my brother bought a property. it was right. It was right for him to buy it. It was the right time for him to buy it, and he bought it right before the crash, right?
Yeah.
And how are we supposed to know? How are we supposed to know that this is? We have no one has a crystal ball. We don't know what's going to happen tomorrow, right?
Nope.
We don't have any anticipation, but we look at real estate as a long term game. It's always a
Yep.
long term, proposition. So he got in, his value went to the toilet, but he just waited it out, and he sold last year and made a bucket full of money because
Yeah.
he just was patient. He was patient
Yep.
and waited it out. And guess what? The rate, his interest rate, he refinanced a couple times to get his interest rate down and paid down his mortgage. He just paid down, paid down, paid down, and it worked out. But yeah, there's always opportunity. You know what I
Yep.
mean?
Yep.
Always opportunity. But I think now, I think that we have a lot more. I think it's not just interest rates that are holding people
Right.
back right now. I think it's not just interest rates, it's not just housing, it's not just availability. Um, it's a combination of a lot of things, right?
Yeah.
It's the supposed or the presumed obstacle or unknown of an election year. And
Yep.
historically, election years impact the real estate market very little.
Yeah.
Very little. It almost doesn't impact the real estate market at all in terms of the number of homes. I mean, people, it slows a little bit because some people will say they'll be a little hesitant and say, well, we don't have to do this now, so why don't we just press pause? But not
Yep.
everybody does that. So there's no huge impact. But we have that we're battling in addition to rates, availability, and prices. And then
Yep.
we've got this NAR thing with the
Yep.
commissions that is an unknown. It's not so much, I don't think it's as much as, it's not the fact that buyers have to come up with more money or sellers are going to be spending or walking away with more money. It truly, I don't believe that that is the case. I think
Yeah,
it's
I
the
agree.
fact that buyers and sellers just don't know.
Yep. Yeah.
Sellers
And
are like, how does this work? And buyers are like, I don't want to do the thing because I might have to bring more money to the table.
yeah.
And that's not necessarily true.
Yeah.
That's
Yeah.
not
I think
necessarily true because a good agent that is good at negotiation, a good, that is knows how to negotiate, knows how to structure an offer, knows about buyer agency and how those fees work. They'll negotiate it into there's a lot of creative ways that you can intertwine that buyer agency fee into the purchase.
yep.
So you don't have to come up with the money.
Yeah. No, most time you don't.
And
And
but the buyers don't know this. They're presuming that
right.
that they're gonna have to take money out of their pocket, and
Well,
that's, I think, an obstacle for a lot of people.
that's because that's what the news said. That's because that's
Yep.
what the news said. And it's unfortunate because again, the major media outlets
Well, I
incorrect
think
on this
it's
issue.
twofold, Joe. I think it's twofold. I think it's media,
Yep.
and I think it's bad agents.
Yes. Yeah.
It's because I'm, and those, watching know I am very transparent about this on my channel, that I truly feel about 80%. This is not based on fact. It's my own personal opinion. I'm
Yep.
doing this for 28 years, and I've seen a big change over the last 10 years. And it's my
Yep.
opinion about 80% of the agents that are in the real estate industry do not earn their money. They
I
are
I would
unskilled,
not
untrained.
disagree.
They're lazy. Not
Yep.
all. They're varied degrees, but they're lazy. A lot of them are in it for easy money. 60% of the agents in the industry, Joe, you probably know this, is 60% of the agents that are in the industry now got in the last 5 years,
Yep.
when all you do is put a for sale sign in the front yard and the
Yep.
thing had multiple offers. They don't know how
Yep.
to work. So if
Nope.
they don't know how to work, they also don't understand how buyer agency works. They don't understand how to represent a buyer,
Yep.
how to negotiate that with the seller. They don't know, and guess what? They're misinforming buyers. So
Yes.
it's the
Yeah.
media and it's the bad agents that are misinforming the buyers. So the buyers are like, "What? I no, I'm not paying that. This is ridiculous. And what are you doing for me anyways?"
Yep.
Because hello, it's a bad agent. So they're like, what, you open the door. I had a situation, and I've told the story before. I had an agent last year, Joe, an agency I will not name, but it has been featured on this live stream before with their data, but I put a property on the market and we had multiple offers and I got an offer from this agent. And I said, wait a minute, you've never been in this property. And they said, that's okay. I said, wait, what? They said, well, my buyer knows the seller, which was true, and was in it a couple years ago. Okay.
Okay.
I said, but don't you want to see the property so that you can like negotiate on behalf of the buyer and give your buyer advice and guide your buyer and all the things? Oh no. I sold 50 houses last year and I only went into half of them. Are you serious?
Yeah.
Are you serious? And then, she proceeded the next day to call me and say, okay, well, I just wanted to let you know we're not offering way over asking because it's only a 2-bedroom. I said, where did you get that idea? Oh, well, I saw it on some website that it was a 2-bedroom. And I said, well, if you had checked the town records, you'd see it's a 3-bedroom. And if you had actually been to the house, you'd see it's a 3-bedroom.
Yep.
She didn't get the offer. She didn't win.
You don't
obviously.
say. You don't say.
But the thing is Joe, she's earning the same amount of money as the agent who represented the buyer that won the bid. It's the same amount of money, except that agent did work.
Yep.
Did a good job, did a really good job actually in representing the buyer. The buyer was well prepared and, knew the process. And, she spent the time, educating her buyer and guiding her buyer. And honestly, the whole transaction went very smoothly because of her guidance to her buyer.
Yep.
They get paid the same.
Yep.
That drives me crazy.
Yep.
That is wrong. Wrong. It's not fair to the consumer.
And I see the same thing here in my market. In fact, it's not uncommon to see private agent remarks in the MLS that stipulate something like, buyers and their agents must see the property in person. Like that's part of, doing it. And
That's
I'll
sad.
tell you, yeah,
That's
it is.
sad.
It's sad that they have to be told that you have to go see the property that you're going to represent. It blows my mind.
Those are 80% agents.
Those are
80%.
And I've heard people go, oh, well, my buyers went to the open house. So they've seen the property and they're the ones buying it. Okay. So why couldn't you go to the open house with them? Like, that's what I do, right? When my client's interested in a house and it's going to be an open house, we go, hey, that's great. We don't have to make an appointment. Now we can go anytime between 1 and 5 p.m. This is great. Why don't you text me 30 minutes before you head over? I'll go down there. I'll meet you in the front. We'll go take a look at the house and then we can talk about it. I can show you comps. I can point out things about the house that maybe might affect desirability and valuation. And then we can cooperatively make a decision that's best for you. And then we can go try to win this house for you. Plus, and this is as an agent that, does list properties and sells properties for people. How do you feel when an agent comes up to you at the open house and says, hey, Jen, my name is Joe. These are my clients, Bob and Sally. And they really like the house. We're going to take a look around. And if I have any questions, I'll be sure to ask you. Okay, great. That sounds good. You're going to be like, wow, this agent is good. This guy's got it together. He's professional. He said hi. You build that rapport. You build that human element, that human factor. And maybe it doesn't make a difference in your clients getting the home, but maybe it does. And that's happened to me one time before. I won a house for a client because we went to the open house. I introduced myself. She was an old school agent. She'd been doing this for a long time. And she told me on the phone after we got the offer accepted, she said, Joe, there was an offer that was a few $1,000s more than your clients. But the way that you and your clients interacted with each other and myself at the open house, I knew that you guys were good, competent buyers and you were a good agent. And that's what I told my sellers. And the sellers selected.
I've had the same story.
Yep.
I've had the same story for sure. 110%. And here's the thing. And this is, for those watching now on the live stream. And by the way, those that are kicking around the live stream, drop your in the chat, just say hi and tell me where you're from. Cause I'd love to see, who's watching and where people are watching from. But, I think the other thing is that's happened, and this is a little public service announcement for home sellers, public service announcement for home buyers. I have had quite a few situations, again, over the last 10 years, a lot in the last 5 years, where a buyer's agent is hired outside of the area that they are looking to purchase in. They're hiring their friend, they're hiring their relative, whatever, and they've got to
Yep.
come an hour to look at a property. And guess what? A new listing comes on the market and they're like, "Oh my gosh, I'm going to this family thing or I've got this other commitment. I can't drive an hour." And then they call me as the listing agent.
Yep.
This is no joke. They call me as listing agent and they say, "Hey, Jen, I live an hour away. Is there any way you can show my clients the house since you're the listing agent?" Okay. No, number one. Okay. No, no, I'm not doing your job. Number one. Number two, if you're a buyer, okay, I'm the other party. Everything I say is I'm going to tell the seller
Yep. Yeah.
everything.
Yeah. It's your
And as a
fiduciary duty.
buyer, you're like coming to me unprotected.
Yeah.
You're coming to me unprotected. That is
Yep.
not how you represent your client.
No.
Number three, your buyer's agent is there, like you just said, to help guide you in that, and that they should have experience on what to look for. You're
Yep.
looking at the aesthetics. You're looking at, can you see yourself living in here? You're looking at the neighbors. You're taking it all in. The buyer's agent, I'm looking as a buyer's agent, I'm looking at ceiling watermarks.
Yep.
I'm in the basement looking for water on the floor. I'm looking
Yep.
for corroded pipes. I'm looking for, any signs of fault. I'm looking for
Yeah.
fault in
Absolutely.
the house because
That's
that's my
exactly what
job.
you should be doing. That's exactly what you should be doing. You're looking, hey, how old does the water heater look? I mean, there's no, can I find a date when it
Hello,
was
Texas.
manufactured? What can I learn about the attic space? Can I look up and see anything? Are the windows double pane or single? Are they newer vinyl? Are they
Yep.
older wood? All of these things that maybe buyers overlook because they're looking at how's the layout, how's the flow, how's the size of the kitchen. They got a lot of stuff to look at. It's our job to look at the nitty gritty. That's what we're there for.
Absolutely. MH08, Denver, Colorado, or not Denver, Iowa, the mile wide city. Gotcha. Gotcha. Maddie B, good to see you again.
Hey,
Sometimes the
Maddie.
agent at the open house is not the listing agent. Yeah, good point. And often they can't answer simple questions like the year the house is built. You bring up a great point. I'm so glad you said that because sometimes a listing agent, because they're too busy to host an open house, they'll grab somebody at the office, which I
Yep.
think is totally pointless, if you want my honest opinion, or they'll grab a brand new agent to say, "Hey, can you just sit in this open house and like take names and stuff while people come through the house?" I mean, during COVID, it was totally different because the name of the game was try to get as many people in the door as possible during
Yeah.
a shorter period of time because you had to in Massachusetts anyways, it was like wipe everything down, set it up one at a time, wipe everything down, lock up. Like
Ugh,
it's
I
just
shudder thinking
feasibly
about it.
wasn't possible to do that. You had like open houses were a function of how we did business, but that was then and this is now. And so I'm going to tell you my philosophy on open houses because I had somebody submit a question about this last week. I again, this is just based on my 28 years of being in this business. Open houses are a waste of time for a seller. Open houses are a waste of time. I know a lot of agents are going to be like, "No, that's not true. That's not true." It's something that is done. It's been done. It's like one of those things that, this is the way it's always been. It's the way it's always been. Well, you know what? I have no problem stirring the pot. And here's why I think they're a waste of time. We are in 2024. You can see the house virtually from any website. If you are serious about that house, if you really want to see that house, you book a private appointment with your agent.
Yeah.
If your agent is not available, which is what ends up happening, agent's not available, they're like, "Oh, I can't see it." Just go to the open house. Joe, they should be going to the open house with the agent just like you do.
Yep.
Okay?
Absolutely.
The open
Without
house
doubt.
is not a free card to say that the agent doesn't have to be there.
Yes.
The real dirty behind the scenes truth, because y'all know I like to have like total transparency. I have no problems in saying this is the dirty little secret with open houses. Ready? You guys lean in and tell you the real reason why agents do open houses is to get more business for
Yeah.
themselves.
Yeah. Yeah. That's
It is not
absolutely
to sell
true.
your house.
You know,
It is not to
there's
sell your house. It does 2 things. Well, actually, it pacifies the seller. So instead of actually doing something that will have this house that, something proactively that will actually sell the house, it makes the seller feel like you're actually doing something. When in actuality, it doesn't help sell the house at all. Number 1. Number 2, every buyer that walks through that door is a potential client, a
yeah.
potential future client.
Yep.
How does that help the seller?
Yeah.
It doesn't. If a serious buyer, and this is just the way I feel, and I know a lot of agents disagree, but you know what? This is my experience. A serious buyer, Joe, will make an appointment to see the house.
Yeah, I agree.
If
I
you're
agree
not
with
going to
you.
miss out on business if you don't have an open house.
No, I agree with pretty much your sentiment. I do feel, I think it depends on the market a little bit. We have some agents in my market where people are like, oh, in order to even request a showing, I have to see your pre-approval and proof of funds. And there are some clients that are like, I don't want to just like share this information with some random agent that's not my agent that I don't know just to
That's
go see
yep.
a
So
house. So I'll go to the open house. And it's like, okay, well, that's fine. Now, how common is that? Not very. That situation's not very common. And the other thing that's interesting about that is if the listing agent / the owner wants to see your a prospective buyer's pre-approval letter and or proof of funds because they go, well, we only want qualified buyers because we want to make sure we don't get any tire kickers, but we're going to have an open house where everybody's invited. Okay, so then why do you need to see pre-approval and proof of funds if you're going to have an open house? If it is a sensitive situation, if it's a high value property, if there's something going on in that seller's life where they need a little bit more discretion, then you're probably not going to have an open house at all. So the open house thing is quite interesting. And Maddie, I'm with you. I don't understand these agents that sit open houses and it's like they didn't even bother to like take a look at the tax roll, the county record, or the MLS sheet. It blows my mind. It's like sitting down to take a test and the teacher's like, here's your test. And the student goes, what's the subject on? And you're like, well, a little late for this. I've been there. I sit open houses for other agents in my office. And you better believe that when I have an open house on a Sunday, my day on Friday, the way that I end my Friday, the last about 4 hours of my day is reviewing the file of that property, reviewing any notes that my colleagues have, making sure I know the MLS input sheet, the tax roll inside out, all of that stuff, because I want to demonstrate to people that walk through the door that I am a competent agent. And Maddie, like you identified, when you ask an agent, hey, Mr. Agent hosting this open house, what year was that house built? And they go, well, I don't really know. That's not a good look for the seller, for the seller's agency, for that agent. It's not a good look. I can't understand why agents are unprepared, but that goes back to Jen's 80% rule.
Yeah, no, absolutely. And the other thing I would add to that is that from a seller's perspective, okay, so from a buyer's perspective, open houses, especially now with the whole commission rules and everything else, it definitely is more convenient. You don't need a buyer agreement to go to an open house.
That's a good point.
However, here's what I want everyone to think about as a home seller. This is what I want you to think about. When an agent makes an appointment to come through your house, the agent has an agreement with their buyer, which means they have, to a certain degree, hopefully, have vetted out that buyer. That buyer has signed something with their name. Okay. They have committed. It's a contract, the whole 9 yards. It's not just some random person walking in off the street, which is what happens at an open house.
Yep.
Anyone, and this is another reason why I don't do open houses. Open houses can be dangerous. Open houses are a risk to a home seller. And I'm not just trying to be like, oh, doom and gloom, scary, scary. It's a very real fact that when an open house happens, the agent, I will stand by the door. Most agents stay by the door because you want to greet people. You want to know who's coming into your house, which means as soon as they're around the corner, they're out of sight. You have no idea what they're doing. You have no idea where they're going. You have no idea how they're gonna unlock windows. Yes, we try to go through the house, make sure the windows are locked, the doors are locked, all the things. But could they go through your medicine cabinet? Yep. So could they open drawers? Yep. Could they be not a legitimate buyer and they're just nosy? Yep. Because there's no requirements on an open house.
Yeah.
Anybody can walk in and walk through your house. I can't
Yep.
stress that enough. And I personally, as an agent, I would never have an open house at my own property, at my own home. Never. I want to know exactly who's coming in. I want names of the agent. The agent knows the buyer. And is it that foolproof? No, but at least it's a barrier. It's a way to vet the person out as
Exactly.
opposed to a stranger.
Yeah.
I get the fact that a buyer wants to come in without a buyer agent agreement, but again, here's the thing is a buyer, a buyer coming in, if they really wanted to see the house without a buyer agent, you can still call the listing agent and say, Mr. Listing Agent, Mrs. Listing Agent, can you show me the house? I don't want to hire you as as a buyer agent. Don't ever sign a buyer agent agreement with a listing agent. Dual agency is not your friend. That's not, again, strongly advise against it. You can't, one person can't be masters, can't have two masters, can't work for this list. My personal opinion, I think dual agency should never exist. But
I agree.
where you're working for the seller and the buyer at the same time, that doesn't make sense.
Yeah.
But can you show up at that house and look at that house with the listing agent as an unrepresented buyer? You sure can. It
Yep.
doesn't have
And
to be. It does
the
not
listing
have to
agent
be an open house.
and the listing agent has a duty to show it to you. If you're
Yep.
transparent and upfront and say, I'm unrepresented, I don't want you to represent me. I want to look at the house. I'm either going to go find an agent or I'm going to represent myself. That listing agent has a duty to get that house sold, a fiduciary duty to that seller. And if that's a willing and able buyer that's being upfront, honest, transparent with you about what the situation is, that listing agent needs to show you the house. I mean, they
Yep.
got their job is to get the house sold.
Yes, 100%. Summer girly or girl V. I don't know. It looks like it might be cut off. But thank you so much for being here. Hey, Jen and Joe, watching from New Jersey.
All right.
When I moved to New Jersey, hired a realtor who was recommended by a friend. He lived almost, he lived almost an hour away. What should have said. The seller agent helped us a few times because of that. Yeah,
Yeah.
this is what I'm talking about. Now we're selling and buying a bigger home and hired that same agent. She was phenomenal at her job. So, you know what? I guess the thing is that if you are happy with the level of service and the thing that I would caution about, and it's not a tried and true, rule. It's not this business is not a one size fits all. You can have a great agent. I have traveled a little bit further for certain people. Really good, I have really strong relationships with who are a
I've
little
done the
bit
same.
outside my normal area. Okay. And I've done several videos on this. If that agent checks all the boxes of a 20% agent, in other words, they're delivering the service of an agent that is that small 20%, of the agent population, 100, then it's fine. Then that's great. That's great. But you just don't want an agent that's in the 80% that lives an hour away. And now they can't advise you. They're not going to advise you. And now you're paying the same amount of money to someone that could have given you a better level of service without costing you any more. So that's you got to check all the boxes. I'm not crazy about the seller agent, helping out a few times. I'm not crazy about that, but as long as you feel like you were well taken care of, again, it's not a one size fits all. And at the end of the day, that's what's happened. That's what's most important is as a consumer that you feel like you had good value. Period.
Yep. Yeah. Good point.
Thank you for that. Appreciate you sharing that. So, do you have anything else to add about this, Joe? I'm looking to see if there was some additional or anything that other thoughts about what's going on with all this stuff.
I think to kind of use Summer Girl's comment as a springboard, the whole, do I use a local agent or maybe a different agent that I know in the past? I got to tell you, there's a lot that goes into using a good local agent. Don't just use a local agent because they're local. Use a good local agent because they're good. but there's a lot of value that a local agent adds. And when I say local, let's say you're looking, like, I'm just going to use my town's names because that's what I'm familiar with. Let's say you're looking to buy a home in Claremont, which is where I live and from, and that's my bread and butter market. And the next town over is Upland. Well, you don't have to find an agent for Upland and an agent for Claremont. The agent from Claremont can service the city next door. That's not
Right.
what we're talking about here. That's all fine and good. But a local agent is going to be more than just someone who's close and can get to properties quickly. A local agent's also going to know the neighborhoods better, know the pros and cons of those neighborhoods better. I know that there's an area in Claremont that is prone to liquefaction because there's an underground water table at a very high,
What is
at a very low
liquefaction?
depth.
What is
Liquefaction
that?
is when the water table is very high, and when we
Yep.
get a little bit of precipitation, that water can come up and actually come into basements. And it basically, it's when the soil kind of liquefies a little bit. It's not like quicksand.
That's called liquefaction?
Yeah. Yeah.
Interesting. I learned something today. I didn't realize
See?
that that's what that was called.
Yeah. Yeah.
Interesting.
It's basically when the
Liquefaction.
ground below, not very far below, starts to get muddy, soppy, wet, liquidy. And I know that there's an area in my local town where there's about 3 or 4 streets that if you're looking at a home on that street, you need to be aware of that. And that is
Yeah.
not
They probably
something
have a
that,
high water table.
yeah, and that's not
Yeah.
something that, an out of area realtor may know. They might not be aware of that. Plus, local agents oftentimes have connections with other local agents, and that can make a difference, right? It's
Totally.
a people business. This is a relationship business, and when there's 5 offers on the table, and that listing agent goes, "Oh, I've worked with this buyer's agent. He brings good qualified buyers," or she is really good at counseling her buyers and keeping them calm, or whatever the case may be. Hey, I'm Mr. and Mrs. Seller, I know that this offer is from a good agent and this is good. They're going to get the deal done. So it's more
Yep.
about just geography. There's other things that go into it as well when it comes to using a local agent versus an agent that might be good but isn't quite as local.
Totally agree. I totally agree. I mean, I think that especially now I think during the pandemic, there was a lot more traveling because it
Yeah.
was easy money.
Yep.
It was easy money, you know?
Yep.
People would say, "I'll go down there, take a look at that house, and then put the offer together, and if you get it, you get it. You don't, and we'll just put another offer in on something else." And so it
Exactly.
was literally them, an agent driving around was all they had to do, and you can sell a house.
Yep.
Well, because people were doing things moved at breakneck speed. They weren't doing their due diligence. They didn't have time. They didn't
Nope.
have time to do their due diligence,
How
which
many
is
stories?
now, it is totally different now. It's
You're
totally
right.
different now. Thank God. We have
How
time.
many
The buyers
stories
have time.
how many stories did you hear where it was like, I submitted an offer with no contingencies, no inspection, no appraisal, and I'm just
Yep.
like,
And they didn't get
why?
it.
Why are
And they
you
didn't
doing
get it.
that?
Yeah,
This
I had
this isn't.
situations where they didn't even get it after they did that because it was
Yeah.
so competitive.
Yeah. Yeah.
It was dumb. That was a dumb time. I would never go back to that ever.
No, it
I
was
you
it was
know,
terrible.
no, it wasn't good for anybody, and I think there's a lot of regret. I think a lot of people got into things, homes that they probably shouldn't have purchased. Oh, we just lost you.
Oh no.
Come back. It's waiting for IV cam connection.
There we
There
go. Look
there
at
you
that.
go.
Just
Oh, we got somebody from Springfield, Illinois. Springfield,
Kenny
not
and
Springfield,
Springfield.
Ohio, but Springfield, Illinois. Different, right? Welcome, welcome, Kenny. So, um, Joe, thanks so much for
Oh,
joining.
thank you. Thank
Really
you.
appreciate you jumping on and sharing your point of view and all the things.
It's always
I
my
think that
pleasure to
it's
hang out with you.
yeah, I think it's always cool to hear what's going on different parts of the country
Yep.
and all the things. Summer Girl says, "I wish I could get those 2% interest rates from that time." Yeah, you're not kidding. You and me both.
Don't we
All
all?
I can say is, boy, am I glad. I plan. I'm a slow mover on things, Joe. Like I'm like very methodical, very like I need to just I do all the research.
Ben, you're
I
not
make sure
slow, you're diligent.
Yes. But that being said, I jumped on the bandwagon with a refi, and I'm so glad I did. I get that low interest rate. Now I'm locked into my house for a bit, but that's okay. But that's, yeah, unfortunately, that's a phenomenon that we probably won't get there. But I will say that I did hear, I was listening to an economic breakdown earlier today that is predicting in the mid fives next year.
I heard the
By
same
next
thing.
year, we'll be into the fives. So
Yep.
I think that is going to bust open the market. I think truly, you know, if it's the right time, you do what you got to do. But if you're forward thinking and you're not quite ready to buy, you're not quite ready to move. Maybe you're getting your house ready. You're doing some updates. You're doing some repairs, increase your value, getting it ready. You're saving some money. Um, I would try to do that sooner than later because I think what's going to happen, Joe, you can tell me what you think, but I think that as soon as we see those interest rates really start to dip down in the mid fives,
Yeah.
I think things are going to go a little bit crazy. I think it's going to get very busy because all of a sudden a lot of people are going to be like, okay, you know what? I can justify moving now.
Yep.
And then
I
they're
agree
then
with
they're gonna
you.
put their houses on the market and there's
Yep.
gonna be a lot of inventory. And the buyer that hasn't been able to find something to buy is gonna be like, yes, please,
Yep. That's
along with a
exactly what's going to happen.
whole bunch of other buyers, you know?
Yep. I agree with you completely, and I heard that even into mid 2026. Obviously, this is shooting it way out there. This is, it's hard to know for sure, but I heard that by mid 2026, we could even be flirting with high fours, depending on what the economy does. Obviously, we don't know if that's going to happen or not, but I agree with you. I think, if we can get it to 5.25, 5.5. I think that's really going to fire up a lot of people that are kind of like in your position, Jen, where you just said, "Oh, I refied. I'm locked into my house." Well, now you
Yeah,
have
I
people
think
that
we yeah, I
you
think we
know,
just need to be careful though. I think that the warning I would say on that is that what will happen is that there, oftentimes, and that's what's kind of happened right now is people are like, oh, there's talk of rates dropping, so I'm gonna wait.
oh yeah,
I'm gonna wait, and I'm gonna wait, and I'm gonna wait. And the more you wait, the more prices are still they're softening, but they're still going up. They're just
yeah,
not going up at that ridiculous amounts.
yeah,
And they're going to continue to grow up. Keep in mind that over the winter they typically dip down
yep,
prices and then they have a big leap in the spring. So the longer you wait, if you're waiting in anticipation, if you can't afford it, you can't afford it. That's a totally different
yes,
conversation.
good
But
point.
if you can afford it and you say, I'm going to wait until the interest rates come down a little bit more, or whatnot, um, I think that could be dangerous because you
Yeah,
could be waiting for something that never happens.
and you can
They
always refi.
you can always refi, but they last year, okay, at the end of last year, everyone anticipated that the rates would be coming down
Yeah,
in the sixes at the beginning of the spring market, and it
yep,
never happened.
never happened.
It never happened. So the talk of fives, the talk of fours, it's almost like, you know what? Let's not plan on that because
Yeah,
it
no,
may
that's
not ever happen.
right. No,
It
that's a
may
good
not ever
point.
happen, and then you're waiting for something that not unnecessarily
Yeah,
because
yeah.
it didn't come to fruition.
No, that's a really good point. You can think about like, okay, that's nice to kind of like be aware of, but you
Yep.
can't count on it. You can't count on that happening. I mean, the good news is if we do get to 5.25 or 5.5, I think what that's going to do is that's going to stimulate a lot of people that are in, like the position that so many are in, right? The golden handcuffs, I have a 3% rate and I don't want to
Mhm.
move because I don't want a six and a half
Or they
percent rate.
can't move because they
Or they
can't
can't.
afford to because
Right.
their payment will jump too much,
Yeah.
you know?
Yeah.
But time will tell. Time
Indeed.
will tell. So, hey, if anybody's looking to get in
Oh,
touch with Joe, this is him. And Joe's gonna be launching a new YouTube channel pretty darn
yes.
soon. So stay tuned for that.
Shortly.
But down in Claremont, California, and if anybody is looking for a 20% agent, there is a link in the description. You fill all that out, and I have a database. I've been collecting names for over 25 years of all the great agents in the country. And it doesn't cost you anything. I get a referral fee from the agent. It's all built and baked into, whatever that agent's making. It doesn't cost you a nickel. But this is my way of helping people. And yes, I do get a referral fee. That's how I put food on my table. I can afford to do this channel. But more importantly, I passionately want to help folks not use an 80% agent and really get if you're going to spend the money to hire a real estate agent, I want you to get your money's worth.
Get a good one. And Jen can help you find a good one.
Amen. 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 So, hey, listen, thanks so much, Joe.
No, thank you.
Appreciate you being here. And this was a fun conversation as always. Always have a good conversation with you. Always. And so, hey, thanks for watching, everybody. Thanks for joining us on the live stream. We got a heated climate these days. Next 6 weeks are going to be a little sticky with what's going on in the national landscape. So let's all be kind to each other. Let's be kind. Let's try to be open-minded. We'll listen to each other. Don't jump to conclusions about people, and we're all just trying to survive this crazy, wacky world that we live in.
Slow down and take a deep breath.
Have some ice cream,
Yeah.
Enjoy the rest of the summer.
Have some ice cream. Heck yeah.
All right, everybody. Have a great rest of the week. See you next week. See ya.